What if I told you that every major move in the crypto market since 2014 could have been anticipated by just one key factor, liquidity? Although everyone knows that money moves markets, most investors don't realize just how useful liquidity can be to predict what's coming next. This one indicator helped investors ride a 20,000% rally from 2015 to 2017 and a 2,000% surge from 2019 to 2021. It also warned about the brutal 80% crash in 2018 and the 70% drawdown in 2022. In this video, I'm going to show you how it's already mapping out the current crypto cycle, not just for the next few months, but all the way through 2028. Because when liquidity expands, investors take more risk and crypto flies. And when it contracts, the risk on party ends. The real question is, how do we know when the tide is coming in and when it's going out? That's where this chart of global money supply comes in. It basically shows the combined global liquidity from 20 major central banks around the world. Global money supply has been trending higher since 2014, just like Bitcoin. But within that uptrend, there are three distinct periods where global liquidity actually dropped, like in 2014, 2018, and 2022. Now, if we look at what cryptos have done since 2014, it has also been trending higher, but with major declines during the periods when global liquidity was falling. If global liquidity rises by 10%, Bitcoin tends to climb nearly 90%. Now, if we fast forward to today, global liquidity has been rising in recent weeks, but cryptos have actually fallen by about 15% in the same period. So does that mean the relationship is now broken? Not quite. There are two factors at play here. Number one is the uncertainty around tariffs. This chart shows the uncertainty around economic policy, showing how confused markets are about future government or central bank actions. Markets hate uncertainty. And when uncertainty spikes, risk assets like crypto suffer. These spikes usually don't last for too long, as we can see from its history. If the market views it as the final word, uncertainty could drop sharply. And that would be a green light for risk on assets like crypto. The second aspect at play today is the lag between liquidity and Bitcoin's price action. Rising global liquidity doesn't always impact crypto prices instantly. It often takes time for the money to move through the system and reach risk on assets. How long, you may wonder? Well, if we take a chart of the global money supply and Bitcoin as a representation of the crypto market and shift the liquidity line forward, we can see something interesting. The best alignment happens when global liquidity is moved about 3 months ahead. In other words, global money supply tends to lead cryptos by around 3 months. And if that pattern holds today, it suggests we could see a crypto bottom sometime in early April before a multi-week rally. But this only tells us about the next few weeks. So how long can this rising tide actually last? And more importantly, when is it likely to go out? That's where this next chart comes in. It tracks global liquidity levels in advanced economies going all the way back to the 1970s. And just like crypto, this chart also moves in cycles. If we measure the time between two lows, so one full cycle, it averages about 65 months or roughly 5.5 years. Now here's the important part. In each cycle, liquidity typically rises for about half that time. So 33 months before turning lower for the second half. So this gives us a useful roadmap. The last major global liquidity bottom came in around December 2022. If we add 33 months to that, we land in September of 2025. So if this cycle continues to follow its historical pattern, global liquidity could keep rising for another 6 months. That would basically mean more support for risk assets like crypto until the global liquidity cycle peaks and starts heading lower for a 33-month decline until mid-2028. So our big call for this crypto cycle is that the bull market is going to be much more steady than most people think. Institutional money is flowing in Bitcoin. And while we think that is going to make Bitcoin continue moving higher over the coming years, it is also going to make it a lot more steady than what it has been in the past. So it could be that Bitcoin keeps up this aggressive trend going throughout 2025 and then slows down a bit. What's certain is that we think this dip is a buying opportunity for Bitcoin. We're not ruling out a little more short-term pain down to the 70,000 support level, but we expect it to recover quite quickly to its all-time highs. Once uncertainty clears up and when that move comes, it's usually very fast. Most traders wait until it's obvious. And by then the bulk of the rally is already over.